Happy morning, people. So, in the today's session, we'll start with Ind AS 41. Tuck we will start, tuck we will stop also. Okay, very simple topic, not much weightage, easy 2-3 concepts and 2-3 questions, and that's more or less you're done with your preparation for this particular topic. Now, Ind AS 41 deals with agriculture. I think the reference of this standard we have seen somewhere. Where did we see this? In Ind AS 16 pp, if you just check, we said biological assets which are used for agricultural activity is not covered in Ind AS 16, it gets covered in Ind AS 41. So now we are studying Ind AS 41 ka little more detail. Fine, people. Okay, first, this standard is applicable for biological assets. But that biological asset should be used for what activity? Agricultural activity. What does biological assets means? Living plants and animals. The living plants and animals, we call it as, or we refer to as biological assets. Sir, for every biological assets, Ind AS 41 will apply? No, for one plant, for one biological asset, Ind AS 16 will apply, which is that bearer plant. So this Ind AS 41 will apply for all biological assets except bearer plant. For bearer plant, Ind AS 16 will apply. For other living plants and animals which are used for agricultural activity, Ind AS 41 shall apply. That's the first point. Okay, Sarji? Alright. Next one is, Ind AS 41 is not only applicable for biological assets which are used in agricultural activity, it is also applicable for agricultural produce. It is applicable for agricultural produce up to the point of harvest. Up to the point of harvest. I'll tell you what this is. And also it is applicable for government grants. If you have received any government grant relating to biological assets, then Ind AS 41 shall apply. These are the three, you could say, scopes or inclusions of Ind AS 41. What are those? Once again, call it out for me. One, Ind AS 41 is applicable for biological assets, meaning living plants and animals which are used for agricultural activity except bearer plant. Another one is agricultural produce only up to the point of harvesting, and some government grant relating to biological assets. Now, what do we mean? I think this one is okay with you, I believe, right? First and third. Can we spend 1 or 2 minutes on the second point? What is that second point? Ind AS 41 is also applicable for agricultural produce up to the point of harvest. What does that mean? Let's take this. What is this so people know? Mango tree. Fine, my drawing is fine, no? It looks like a tree only, no? Yeah, what is this chuki? All this chuki are mangoes. Okay, so this is a mango tree. From mango tree, we have got mangoes. Now, mango tree is a bearer plant. We have already discussed this, right? Bearer plant, you already know 3 conditions. What are those? From that plant, you should get an agricultural produce. That produce, you should get it for more than 12 months. That plant should not be sold in the ordinary course of business. For bearer plant, Ind AS 16 shall apply. Now, this is a bearer plant called mango tree. From mango tree, what are you getting? Mangoes. That mango is a factory produce or agri produce? That particular mangoes that you get from your mango tree is an agricultural produce. Okay. Now, this agricultural produce, no, up to the point of harvesting, which standard will apply? Ind AS 41. Meaning, now, harvesting means plucking. Till the time you pluck the mangoes from the mango tree. Till the time you pluck the mangoes from the mango tree, which standard will apply? Ind AS 41. So, all that mangoes should be valued as per Ind AS 41. Harvesting. So, here harvesting refers to plucking. Once you pluck out, once you remove those mangoes from mango tree, you will sell it in the ordinary course of business. Then it becomes inventory, and which standard will apply? Ind AS 2. Till the time of harvesting, that mango ka valuation will be done as per Ind AS 41. After you pluck out, after you harvest, since you sell it in the regular course of business, it becomes inventory. Then Ind AS 2 inventory ka standard will apply. Confusion or clarity? No problem with this now? Everybody is clear with the online point? The second one, how to value and all, I'll tell. We have not got to the valuation part yet. We're just looking at the meaning per se. So far, good online. Can I move on to the next one? All the 3 applicability points are good enough? Okay, no comments. So no comments, I'll take it as got it. That means you are writing something. Can I think on those lines and move forward? Oh, okay, next. Now, exclusions. Till now, we saw the inclusions. So, now we are looking at the exclusions. Now, people, we already discussed this. If you are using any land or tractors and all for agricultural activity, Ind AS 41 will apply or Ind AS 16 only? Land used for agricultural. Land is not a biological asset, right? Biological asset means living plants and animals. So, if there is any agricultural land which is used for agricultural purpose only, that agricultural land will be accounted as per Ind AS 16. Okay, for bearer plant also, which standard will apply? Ind AS 16. Now, if you use any intangible asset for agricultural activity, now sometimes you use software to check the density or fertility of the land and all. These days, people are fancy, Now, everything we have, we take the help of technology. So, if you are using any software to check the fertility of land and all, that software will you account it as per Ind AS 41 or Ind AS 38? If you are using any software for agricultural activity, that software accounting will be still as per Ind AS 38 itself, not as per Ind AS 41. Okay, sir. Now, for this assets and all, for bearer plant and all, if you have received any government grant, that is not covered under Ind AS 41. Once again, tell me this. What did I say the last point? Towards these assets like bearer plant or land or intangible asset used for agricultural activity, if you have received any subsidy from government or grant from the government, that grant is not accounted as per Ind AS 41. It is accounted as per Ind AS 20. Government grant wala standard. Okay. Now, go back one step. What did we say? Previously, we saw in inclusion also government grant. Here we are saying in exclusion also we are saying government grant. What is included? What is excluded then? Sir, if government grant is related to biological assets, if the government grant is related to biological asset, accounting of government grant will be as per Ind AS 41. If you have received government grant for other assets, which are not accounted as per Ind AS 41, then that grant is also not accounted as per Ind AS 41. For a grant, we have a separate standard called Ind AS 20. That standard will apply. Govinda or got it? Paka? Not Tirupati task, no? Manageable? Okay, so till here we have done the inclusions or exclusions. I think harvesting meaning also you already know. Till the time of harvesting, agricultural produce will be accounted as per Ind AS 41. After harvesting, it will become inventory and valuation will be as per Ind AS 2. That's what this point is trying to say. Now, one small relating to agriculture, we need to know the definition, because sometimes what ICI is also asking here is they will give you a list of activity and say whether such activity is an agricultural activity covered under Ind AS 41 or not. That is also one type of question ICI prefers to ask from this particular topic. Okay. Again, this topic of weightage, I feel individually questions coming are very less. Maybe they might combine with in a bigger case study question and ask for 2 marks. That's my interpretation. But you do have like 2 to 3 questions which can be asked for 5 to 6 marks. There's a scope, right? We'll also be doing that, but accordingly, somewhere it will fit in between 2 to 3 marks at best. That's the usually ICA way of asking. But don't do this blunder of preparing only based on marks. Huh? Because some students will say, only 2 marks means I will skip this topic. ICI always gives the weightage in range. It does not give a definite weightage. It says 2 to 6 marks, meaning it can come for 2 marks also, it can come for 6 marks also. If your Vastu is not good, maybe in the attempt you skipped, it may come for 6 marks also. So personally, I am not a big fan of skipping things. Even in fast track batch also, we are not skipping. I am not getting the hard to skip, right? Somehow we are trying to cover it. So it is coming at a little bit of writing practice. So, but still I feel it is okay, right? So my approach is that way. Know everything, right? If you feel something is little tricky, something you are not able to get it, at least know something. I feel something is better than nothing. I will take 1 mark over 0 marks any day. Even 1 mark is okay for me, right? But skipping things entirely, I feel it adds a lot of tension and it unnecessarily brings a lot of pressure. Because back of your mind, there will always be a notion. What if that comes? So that is not the approach in general. I'd like to keep it for examination. We are at student level. We are expected to know. So let's give it our best. Okay, that's all. That's the way I approach things. Okay, now look at this particular definition now. Now we are looking at things. So Agricultural means it's an activity of cultivating, developing biological assets to get some produce. Agriculture simply means we are working on biological assets. We are working with respect to biological assets. What is our intention? To get some produce like mangoes or apples or whatever. Okay, that is the basic definition. Now you don't have to know this, but know this point what I've written in here over here. That will help you to sort out few questions that can be framed here. Very simple. Sir, if you want to call something as agriculture and want to apply Ind AS 41 means there should be a biological transformation. What did I say? If you want to treat something as an agriculture and apply Ind AS 41, there should be some biological transformation. Point number one is that. You can write in your own words. You don't have to mug up the definition. They will not say explain biological as doubtful. What they will do is they will give you an activity, a case study. And they will say whether it is an agricultural activity or not. So as long as you are able to identify, that is good enough. So if you can understand this in your own words, also it's absolutely fine. So let's go a little slow over here. Biological as for Ind AS 41 to apply, there should be a biological transformation. There should be what? Keyword there is biological transformation. Biological transformation is simply this. A seed becoming a tree. From a plant, from a sapling, it is becoming a tree. From a seed, if it becomes a tree. Now, if you want to get mango tree, first you will put mango seeds, no? The transformation from that mango seed to the mango tree is what we refer to as what? Biological transformation. Okay, that is one. Another one, 10 goats have become 25 goats. 10 goats have become 25 goats. What has happened to the number? Increase, procreation, right? Natural process. That is also biological transformation. Increase in the biological assets. All that I've written over here, okay? A seed to plant, a seed becoming a plant, or one goat becoming 10 goats, or one pig becoming 10 pigs. That is also biological transformation. Or a 1-year-old cow becoming a 2-year-old cow. 1-year-old cow becoming a 2-year-old cow. What is that now? What does this mean? Sir, at the beginning of the year, at the year beginning, I had one cow whose age was what? 1 year old. At the end of 1 year, is it 1-year-old cow or it has become 2-year-old cow? 2-year-old cow. That is also biological transformation. Physical aging is also biological transformation. For you to apply Ind AS 41, this sort of biological transformation is a must. Got it, everybody? Clear? Now, people, there are 10 tigers in jungle. There are 10 tigers in jungle at the beginning of the year. At the end of the year, they have become 15 tigers. Can I say that 15 tigers is my biological asset and show it in balance sheet? I am in Karnataka. So in Karnataka, let's say there is Bandipur, one reserve, national forest. In Bandipur, now there were 10 tigers. 10 tigers have become 15 tigers. So can I show 15 tigers as an asset in my balance sheet? No. Biological transformation has happened. No. 10 has become 15. No, I will show no. Why are you laughing, pa? Alright, I can show no. There is another definition for you to apply Ind AS 41. Biological transformation should be happening and the entity should manage that biological transformation. If you want to show tiger as an asset in your balance sheet, the tiger ka biological transformation should have happened, and who should have managed that? Me. If we are managing that biological transformation, then it is our asset. So in forest mein, if the animal population, if it is increasing, tree ka number of trees, if it is increasing, all that I cannot show it as a biological asset. Because though there is a biological transformation happening there, am I managing that or nature? Mother Nature is managing that, not entity. Yes or no? So that is the second point. As long as everybody good. So tell me the 2 pointers relating to Ind AS 41 now, people. What do you remember? Call it out for me. For Ind AS 41 to apply, there should be a biological transformation. Some of the examples of biological transformation are plant to tree. Number increasing. One pig becoming 5 pigs, like that. Okay, because giving birth, procreation. And then physical change. 1 year, 2-year-old cow becoming 3-year-old, 5-year-old pig becoming 6-year-old, like this. That physical, that and all is an example of biological transformation. There should be a biological transformation of biological asset, and who should be managing that biological transformation? Entity. As long as there is biological transformation and we are managing that, then you can apply Ind AS 41. Clear as people? Now you tell me, people, is this a biological transformation? Is this seed becoming a plant a biological transformation? Now a farmer has put a mango seed. Farmer has put up a mango seed and daily he's coming and watering the plant. Okay, and he's spraying some chemicals, so he's protecting from dust to window and all to make sure that the seed becomes tree. Okay, that means, is the farmer managing biological transformation? Yes, because he's taking care of that seed to become a tree. Everybody good? For what joy is this farmer doing this? For what joy is farmer wanting that seed to become a tree? For what joy? So that he can get some agricultural produce, so that we can sell that. Yes or no? So we should manage that biological transformation so that we can get some agricultural produce. That is one. Or that farmer can sell the tree itself. That farmer can sell the tree itself, meaning you can sell that biological assets itself. We are managing biological transformation so that we can sell biological asset itself, or we can get some agricultural produce from that biological assets. For one of these reasons, we are managing the biological assets. Got it, everybody? That's all. That's all is a definition. If this much, if you remember, I think that's good enough. You can manage the question. Question I'll show you in a bit. Everybody, okay? Done. Can I move on to this? This is the only funda. You need to be a little more careful over here. Rest are all pretty very straightforward accounting. Hardly any dumb. Move on, Sarji. This and all is okay. It's fine. Leave. So let's move on to the next question. Now you tell me, people. One question is there. Observe and tell me which standard will apply for which activity. ABC is growing vineyard. It harvests the grapes and produces the wine. Now people, basically they are growing the grape plants. That only we call it as vineyard. From the grape plant to you are getting grapes. Using grapes they are producing wine. This is the activity company is doing. Now which activity will fall under the scope of Ind AS 41 they are trying to say. Okay, now first, that vineyard or that wine tree or wine plant, whatever you want to call it, will the company sell that? Will the company sell it in the ordinary course of business? No. The company will protect that particular plant. Yes or no? And usually, as per as my knowledge goes, from that vineyard, you get grapes for more than 1 year. From that grape plant, you get grapes for more than 1 year. So indirectly, what I'm trying to say, this vineyard or grape plant is a bearer plant. It's a bearer plant. For bearer plant, which standard will apply? Ind AS 60. Got it? Everybody good? Now, from this bearer plant, you are getting an agricultural produce. What is that agricultural produce? Grapes. Just now we learned. Agricultural produce up to the time of harvesting, which standard will apply? Ind AS 40. That's what we need to say. Till the time the grapes are harvested. Harvested means plucked out. Till that time, grapes ka valuation will be done as per Ind AS 40. Once the grapes are harvested or plucked out, then the grapes are used to produce wine, or maybe the grapes itself is sold in the ordinary course of business. Then it becomes what? Inventory. After harvesting, it becomes an inventory and applied, and which standard will apply? Ind AS 2. So for these are the activities for which different standards will apply. They ask for which activity Ind AS 41 will apply, which is what? Grapes. But only up to the point of harvesting. That's all is the answer for this particular question. Carry on, people. You got the notes, right? In your group? I asked them to remind it and send the notes again. I hope you got it. Those of you who are in the group, by the way. Recorded people don't ask about the group. Once the class is over, that group will be usually deleted or something. So you don't have to worry. For you, all these notes will be uploaded in the course itself. Under the course itself, along with the class notes, these notes also will be uploaded. So you can download it from there itself. Others, everybody is there in the group, yeah? No, if you're not there, just get yourself added so that all these notes will be sent across to you. I think you need to get yourself admitted to add. There's some process. I think you can check with the person up front. They'll guide you what it is. Okay. Yeah. So especially to get the class access and all, you need to get yourself admitted and then only. Yeah, so that's all. Palani, you probably raise a ticket for that. Maybe what they would have not uploaded it. Sometimes they take, I said, no, 24 hours they take to upload the videos. If it is not uploaded, post it in the WhatsApp group or better raise a ticket that this video is not done. So immediately they will do it off. So you don't have to wait to tell me, because I'll have to wait till the time they come. I would have forgotten, right? It's better you raise a ticket so that immediately, usually all this, they will try to sort it out within 1 or 2 hours. Okay, so it will be faster that way. If it doesn't happen still, then you let me know. I'll try to follow up with them. Okay, but better go for help ticket. That's much easier. Okay, got it. Can I move forward to the next one? Now people, biological assets, you show it in your balance sheet. You show it in your balance sheet. That's the reason we are doing all the standards. Okay. Now, you remember for Ind AS 16, Ind AS 38, investment property and all, there was recognition criteria. What is that recognition criteria? Web and cost measurement. Here also same thing. If you want to show biological assets in your balance sheet, there should be some FEB. From that biological asset, we should have entity should be getting some future economic benefits. Second criteria is what? Cost measurement. Here, what Ind AS 41 says is cost or fair value should be able to measure reliably. What is that? Cost or fair value, one of the two things you should be able to measure it reliably. And the first point is common sense. Sir, if you want to show biological asset in your balance sheet as an asset, first of all, it should be an asset. When can you say it as an asset? It should be within your control. So is this really required in definition or faltu? Sir, the moment you say it is biological asset, it has to be within your control. Still they have mentioned this, but it's okay. This is like really not required. So one, that biological asset should be within your control. Two, you should be getting some future economic benefits from that. 3, cost of that biological asset or fair value of that biological asset, you should be able to measure it reliably. If these 3 are satisfied, then only you can show biological assets in your balance sheet. That is one. This is the recognition criteria of biological assets. Okay, sir, you don't have to go through all of this. Just what I've written here is more than enough. I've just summarized it for you there. Okay, next is measurement. Sir, at what value will you show biological assets? We already learned that Ind AS 16, Ind AS 38, Ind AS 40 says initially all these assets are recognized at cost. Biological assets, right? Or Ind AS 41 says whatever assets that you show as per Ind AS 41, initially as well as subsequent recognition. Initially as well as subsequent recognition is done at fair value less cost to sell. Initial recognition as well as subsequent recognition, biological assets are measured at what, people? Fair value less cost to sell. Both agricultural produce also. Whatever components you are showing in as per Ind AS 41, all those components will be valued initially as well as at every reporting period at fair value less cost to sell. Only if you are not able to find out fair value, if you are not able to find out fair value, then you will go for which model? Cost model. If you are going for cost model, then you will deduct depreciation from biological assets. Under fair value less cost to sell approach, you will not reduce depreciation. Because if you reduce depreciation, will you be showing this asset at fair value or lesser than fair value? Let's say the fair value is 100. Let's say the fair value is 100. Now, if you reduce 10 rupees depreciation, that means the value will become 90. Ind AS 41 says the asset should be shown at fair value less cost to sell. Is this 90 fair value? No. Hence, if you are measuring the assets as per Ind AS 41 at fair value less cost to sell, means depre will come or no depre will come. No depreciation will come. However, if fair value is missing, then you will measure Ind AS 41 assets at what value? Cost model. If you're following cost model, then you will reduce depreciation. Getting the difference between these two, everybody? Pakka? No issues? And this is initially as well as subsequently. Subsequently means it could be quarter ending or it could be year ending. Because some listed companies follow quarter ending financial statement, no? Right? So, whichever reporting you are doing, at every reporting period, biological assets is measured at fair value less cost to sell. If fair value is missing by chance, it's a very rare circumstance, because in today's environment, almost everything and anything you can sell. If you can sell it, it's easy to find out the fair value. right? Only if you feel I cannot find out the fair value at all, then only you can go for what model? Cost model. Only under cost model, depreciation is done. Otherwise, in fair value less cost to sell model, depreciation is not accounted. That's your measurement. Any problem? Any problem? No. Okay, look at this example. Oh, what is this again? Oh, mango tree. What is this? Chuki? Mango tree. Or rather, mangoes. So, this tree is a bearer plant. Bearer plant you are counted as per what? Ind AS 16. But mangoes from the mango tree are agricultural produce. Agricultural produce should be measured initially at what? Using which standard? Up to the point of harvest, agricultural produce should be valued at Ind AS 41. After harvesting, Ind AS 2. Okay. Now, you people tell me, is there any cost associated? Why, or maybe if you want to know the logic, why agricultural produce up to the harvest is recorded as per Ind AS 41 is, now you already know inventory. You have studied AS2. Inventory should be valued at cost or NRV, whichever is lower. What is the cost of these mangoes for the farmer? No cost, because you got this as a natural process. Correct or no? Yes, no, everybody. Farmer put the seed to get the bearer plant. But what is the cost associated with mangoes? Did farmer spend anything? No. So cost you cannot measure it reliably. Hence, mangoes are recorded initially at what value? Not at cost, but at fair value less cost to sell. And fair value less cost to sell is an approach of Ind AS 2 or Ind AS 41. So suppose before plucking the mangoes, that only we call it as harvesting. Let's say all this mango value is 10 lakh. The fair value of all this mangoes is how much? 10 lakh. Now means till the time you harvest, mangoes will be shown in your books at what value? 10 lakh itself. Correct? After you harvest, will you apply Ind AS 41 or Ind AS 2? After harvesting, will you apply Ind AS 41 or Ind AS 2? Ind AS 2. Correct? But for Ind AS 2 valuation, you need two components. What are those? Cost or NRV, whichever is lower. What Ind AS 41 and Ind AS 2 says is, take this fair value less cost to sell itself as a deemed cost. Take this fair value less cost to sell itself as what? Deemed cost for inventory valuation. That means after you harvest, this fair value less cost to sell itself becomes what? Cost for inventory valuation purpose. This is a deemed valuation approach. Understood, everybody? Okay, this fair value less cost to sell itself, you'll consider it as cost for inventory valuation purpose as per Ind AS 2. This is the approach. I'll give you a minute in case you have any reservations. Ask. If you're through, we will move forward. No comments from online, no comments from offline. That means good. No confusion. Pakka? Any confusion is there? No? All okay? No, this will not be depreciated because these assets will last for more than 1 year or less than 1 year. Depreciation drama will come for cows, goats, and all. For agricultural produce, you will not calculate depreciation. Useful life. He's saying, sir, how do you calculate depreciation? Based on useful life. Cows, you know the life expectancy, no? Like humans, ka life is 60 years on an average. Like that, cow will have a life, no? An entity will know for how long will they use it, no? Suppose entity feels they will be using this cow for 15 years for their business purpose. That means that useful life of the cow will become 15 years. So you depreciate over 15 years. Like that. Based on a company ka entity ka useful life, which company will know. Correct, everybody? Even if you don't know, at least you can take the physical life of the cow itself to be useful life for depreciation purpose. But such questions will not come in exam. In examination, the question will be around the fair value because this is very easy. Okay, here there is some dramas and some interesting points can be put forth. So they will only test, in my view, they'll only test this in exam and not this one. Clear? Okay, move on to the next. Now look at this. Now the question. So I think that we have 1 or 2 small concepts, that's all. But let's get maybe a couple of questions done. Pay attention to this. Or maybe let's have a quick recap since these are some new terminology. From the top, let's recap it once for us. Standard name. Ind AS 41 that talks about agriculture. Okay, so the scope of the standard are three things predominantly. One, biological assets which are used for agricultural activity. Biological assets means living plants and animals. But is bearer plant coming under Ind AS 41? No. Which standard will apply for bearer plant? Ind AS 16. Okay. From that biological asset, if you get any agricultural produce, that is also accounted as per Ind AS 41 also. And if you're getting any government grant, either relating to agricultural produce or relating to the biological assets, mostly it will be relating to biological assets, then such grant cut treatment also is recommended by Ind AS 41 itself. These are inclusions. Tell me some of the exclusions. If you have any land or tractor or software or etc. used for agricultural activity, for tangible assets you will apply Ind AS 16. For intangible you will apply Ind AS 38. For bearer plant, which standard? Ind AS 16. If you have received any government grant towards that land or tractor or intangible asset to bearer plant, you will apply Ind AS 41 ka drama or Ind AS 20 ka. Ind AS 20 ka normal government grant ka standard you will apply. Okay. And then agricultural produce up to the point of harvest. That means what? Till the time you pluck it out, that if you are getting a fruit, till the time you pluck out the fruit, it will be accounted as per which standard? Ind AS 41. After you pluck it out, after you harvest, it becomes inventory, and which standard will apply? Ind AS 2. Okay. Next, definition. Sir, for you to call something as, basically here you need to do, if you want to call it as agriculture, means you are doing something with biological assets. Okay. Now, what you're supposed to be doing in our own definition, for you to apply Ind AS 41, what should be there? There should be some biological transformation, and the entity should be managing the biological transformation. Biological transformation ka example is seed becoming a plant, animals increasing in number due to giving birth, procreation, etc. One becoming 5, 50 becoming 100, like this. Or aging. Aging is also a biological transformation. 5-year-old cow becoming 6-year-old cow, 10-year goat becoming 11-year goat. That is also a biological transformation. But keyword there is the transformation entity should be managed. With what joy? Why are we managing this biological transformation? So that we can get some agricultural produce from that biological assets which we can sell, or we can sell biological assets itself. Like in case of pig farmers, what do? They manage the pigs so that they can sell it. So they are managing biological assets so that they can sell biological assets itself. So you're doing this management so that you can sell either biological asset itself, or you can sell the produce that you are getting from biological assets, for one of the two reasons that you are using. Correct? Huh? Everybody fine? Okay, this is your definition. Next, we looked at if you want to recognize an asset as per Ind AS 41, there are a few recognition criteria. What are the three recognition criteria? One, that asset should be within our control. Next one, FEB should be there. Next one, cost or fair value, you should be able to measure it reliably. All the three should be satisfied. Next comes the measurement. Initially, as well as at every reporting period, the assets as per Ind AS 41 are measured at, first priority is always fair value less cost to sell. That's the first and most priority. Only and only if fair value is missing, then you will go for cost model. If you're following fair value less cost to sell approach, depre will not come. Because the moment you account depreciation, asset ka value will fall below fair value. That is not the intention. Okay, if at all, if fair value is missing, then you will go for cost model. Under cost model, you will depreciate the assets if the useful life is more than 1 year. Correct, Sarji? Okay, now comes the question. This question, check. Question number 2, easy question only. Keep your calculator. A farmer owned a dairy herd of 3-year-old cattle. We are in cattle business. That means what are we going to do? Manage these cattle or cows so that we can get some milk from that, or we can sell the cows itself. Maybe our business is to sell cattle itself or milk that we get from cattle. They have not told that, one of the two, it's fine. So is this an agricultural activity as per Ind AS 41? Yeah, because we are managing the biological transformation so that we can sell some agricultural produce, or we can sell that biological asset itself. Okay, but key point there is, what is the age of that cattle or cow? 3-year-old, underline that. But this 3 years is on what date? 1st April 20x1. At the beginning of the year, all these cattle or cows were 3-year-old with a fair value of 13,750. Okay. And how many cattle we have? 200 and 250 cattle. So total fair value is 13,750 and totally we have 250 cows means what is the fair value of one cow? Can you tell me that? For 250 cows, the fair value is 13,750. For one cow, how much? 55 rupees. Your calculator is showing that number. One cattle or one cow ka fair value is 55. Easy. Alright, look at the next. And also one more. At the year beginning, what is the age of this cows? 3-year-old. The fair value of 3-year cattle as on 31st March 20x2. Sir, this is 1st April 20x1. This is 31st March 20x2. So this is year ending. At year ending, 3-year-old cattle ka fair value is how much? 60 that they have given. Okay. The fair value of 4-year cattle as at year ending is 75. 3-year-old cattle ka fair value and 4-year-old cattle ka fair value they have given both at what date? Year ending date. Fine now people. But we have 3-year-old cattle or 4-year-old now? Because at year beginning it was 3-year-old. So that means at year ending it will become a 4-year-old. Yes, no. But still why have they given 3-year-old cattle ka price? Okay. Now people, whenever there is biological assets, no, carefully listen to this. When they give you biological assets ka data, there are two types of gain that can come. There are two types of gain. Usually it will be gain. It can be loss also, but in majority of the cases it will be a gain. So there are two kinds of gain that will come. One is the physical change gain. One is the physical change gain. Another one is the price change gain. Two gains. What are those? Price change gain and physical change gain. Both we need to calculate and account separately if information is available. If information is given in the question means both these gains we need to calculate separately and account it. If information is not given, then you can calculate the total gain. In bigger question, this breakup will not be available. So we will only calculate the total gain. But in smaller questions like this, both we can calculate. Fine, that is one. How to calculate this? Take your calculator. You're writing something. Need some time? Can we look at the calculation part of it? Okay, take your calculator. Now people, first we will calculate price change gain. First, price change gain. Now, at year beginning, what was the fair value of a 3-year-old cattle? One cow ka or one cattle ka fair value at year beginning was 55. But the same 3-year-old cow, year ending value is 55 or 60. 55 has become 60. This is what? See, this is also 3-year-old cattle. This is also 3-year-old cattle. So this is a physical change gain or a price change gain? Only price has changed because age is same. No, this is also 3. This is also 3. But year beginning value, fair value is 55. Year ending value is 60. 55 has become 60 means how much is the gain? 5 rupees for one cattle. We have one cattle or 250 cattle? 250 cattle. Tell me the total price change gain. 250 into 5. How much is that, people? 1 to 5. What is that 1 to 5 0? Price change gain. Any problem in this? Anybody? So far good? This is how you calculate the price change gain. Basically check the opening fair value with the closing fair value. But the age should be different or same? Age should be same. 3-year-old. Check. 55 has become 60. So the price change gain is 5 rupees per cattle and we have 250 cattle. So this is your total price change gain. Now can we calculate one more? Which is what? Physical change gain. Physical change means age. Now at the year beginning, what was the age of our cattle? 3. At the year ending, is it 3-year-old cattle now or 4-year-old cattle? 4-year-old cattle. Correct. Now at the year ending, it is now 4-year-old cattle. 4-year-old cattle ka fair value is 60 or 75? 75. That means what, sir? Check. 3-year-old fair value, 3-year-old cattle ka fair value is 60 at year ending. 4-year-old ka 75. What is the difference between these two? 15 rupees. That means that 15 rupees is a gain only due to what? What is the difference between these two? The only difference between these two is 1 year. Correct, no? The only difference between these two is the year. That is nothing but what? Physical change gain. That is nothing but physical change gain. Everybody got it? So calculate 75 minus 60. How much is it? 75 minus 60. How much is it? 15 rupees. 15 rupees is the physical change gain for how many cattle? One cattle. We have one cattle or 250 cattle. For 250 cattle, how much is the gain? Calculate. Multiply in a calculator. 15 into 250. How much is that? 75 minus 60 is 15 rupees. That is a physical change gain for one cattle. So into 250, if you do, you should be getting 3750. Okay. That means what is the total gain, people? What is the total gain? Price change gain is this much. Physical change gain is that much. So the total gain is 5,000. Total gain is 5,000. Understood, everybody? If they give you the information separately for price change and physical change, then calculate it. Otherwise, directly calculate what? Total gain. How to calculate total gain? Very simple. You know the measurement. Tell me, people, what is a measurement? What is the measurement of assets as per Ind AS 41? Initially, as well as at every reporting period, only one measurement basis, which is what? Measure it at fair value less cost to sell. If cost to sell is not given, we will take it as 0. Okay. Now, people, we are approached year end. We are in year end. At year ending, can we value our cattle at 55 rupees? Is this a fair value at year ending or year beginning? At year beginning, am I having 3-year-old cattle or 4-year-old cattle? At year ending, I am having 4-year-old cattle. 4-year-old cattle, what is the fair value? 75. Yes, sir. Yes, sir. That means, tell me, at what value should I value? We can calculate this in multiple way. That means biological asset should be measured at what? 75 at year ending. One biological asset should be measured at 75. We have 1 or 250. So into 250, you do. How much are you getting? 18,750. Any problem? This is what I need to measure my biological asset at year ending. But at year beginning, at what value am I measuring my biological asset? At year beginning, what was the fair value? The fair value was 55. Correct? No. So at year beginning, one biological asset, I'm measuring it at 55. How many biological assets I have? 250. That means what is my measurement? 13,750. I'm showing my biological asset at 13,750 in my books at year beginning. At year ending, from 13,750, I need to make it as 18,750. So biological asset, I need to increase. An asset ka value, if I'm increasing, means loss or gain. Gain. How much is the total gain? What is the total gain? The difference between these two is nothing but 5,000. What did you get here? 5,000. Like this. If breakup is there, calculate price change gain, physical change separately. Otherwise, directly calculate what? Total gain. Multiple ways to calculate. Done, sir. Or you can also straight away calculate in one line. How? Sir, what is the fair value at year end? What is the fair value at year end? 75. What was the fair value at year beginning? 55. That means how much is the gain? 20 rupees for one cattle. We have 20 or 250? 250. How much is that? 5,000. This is also another way. Multiple ways you can calculate. All these are total gain. So check the information and accordingly calculate the question. Ideally, you should calculate physical change gain, price change gain separately, because both should be transferred to SPL as per Ind AS 40. Both these gains are transferred where? SPL. Okay, if you want, tell me the entry for this. I've written the entry, but tell me the entry. Let's see. This is a better viewpoint for us to pass the entry. Tell me, people. I'm showing my biological asset at year beginning at 13,750. Now I have to bring its value to 18,750. That means asset ka value I need to increase by 5,000. Asset has what balance? Debit balance. How do I increase it? Debit it. So the journal entry we will pass is what? At year ending, we'll have to pass one journal entry. What is that? BA account debit. BA means biological assets account debit. How much I need to increase my biological asset by? 5,000. Correct? Can I write to bank? Did I pay any extra money? 5,000, or this is just a book? This is a gain. This is a gain. This price change gain and physical change gain, or rather the total gain, goes off where? SPL account. To SPL account 5,000. This is a journal entry. Clear, people? Any problem? No. Okay. That is it. I have written the entry over here. This gain is nothing but your fair value gain. This gain includes both physical change gain and price change gain. Ideally, you have to show this two gains separately in P&L. But entry, if you want, you can pass one like this. Entry they have not asked, just passed it for your reference.
Physical change gain. That it will happen from April 1st to March ending.
Ending, correct.
Why we are taking from April to March?
No. You just compare the value. At year ending, what is the value? 75. Correct? No? Fine. But the same, if it is a 3-year-old cattle, what is the value? 60. Now you can't take this, sir. Your question is, why am I not comparing these two? Na? Is that your question? Sir, this is 4-year-old, this is 3-year-old. This is 4-year-old, this is 3-year-old. Correct? When a 3-year-old cow becomes 4-year-old cow, no, there are two things that will happen. One, age has also changed. And if you know the cattle business and all, based on the age also value will change. 1-year-old cow ka value and 2-year-old cow ka value are different. So price differs also based on the age. So two gains you will get. So from 1-year-old cattle has become 2-year-old cattle means age has also changed and price will also change. If I compare 75 with 55, I will not get physical change gain. I will get the total gain. Because the gain will occur on assets on two grounds. What are those two grounds? One is due to age, another one is due to price. Inflation also is there, no? At year beginning, if the value is 55, means year ending it will be same or it will increase. So from beginning price to ending price, if you compare, you will not get physical change gain. You will get physical change gain and price change gain. If you want only price change gain, then check. 3-year-old cattle ka year ending value is 60. If there is no price change gain, 4-year-old ka price also should be 60. Is it 60 or it's more? It's more. That means this 15 rupees is only due to age. It's only due to age. So hence that is. But in bigger problem, we will be doing like the way you are saying. What is he saying? Compare the opening price with ending price. In bigger problem, we will be doing that because we will do the directly total gain wala count. But in this problem specifically, they had asked what is the price change gain and physical change separately. So when they ask it, you need to calculate it separately like this. In bigger problem, directly ending price, opening price you compare, you will get total gain and pass the journal entry for total gain. That's what we'll be doing in the next problem onwards. Any more doubts or sorted? Online, no? Can I move forward? Have you got the base in terms of accounting, people? Everybody online? Your confirmation I'm waiting so that I can start the next set of questions. Here, no problem. All good? Okay, then we'll move on to the next question number 3. Okay. Check this, everybody. Simple question. XYZ on 1st December 20x3, dates are important, purchased 100 sheeps at a market value of 5 lakh. Sir, market value means fair value. But we should measure biological asset at fair value less cost to sell. If they give cost to sell information, consider. Otherwise, cost to sell will be taken as 0. So we will see whether it is available or not. So fair value is 5 lakh and that's what we have purchased the sheep for. Transaction cost is 2% of the market price. Transaction price is what? 2% of the market price. Market price is 5 lakh. 5 lakh ka 2% is how much? 10,000. Okay. Was incurred, which was paid by the seller. Sir, purchaser is incurring this transaction cost or seller? Seller. That means, can I say this is a selling cost? This is a cost to sell. Do you agree? Buyer is not incurring this. Who's incurring this? Seller. That means in order to sell this product, seller has to incur a transaction cost of 2%. What is this? What is this? This only is nothing but your cost to sell. Correct? No. Yes, no. Chandu, okay, Nada. Any problem? No. So how much is cost to sell here? How much did you, what is the transaction cost is 2% of the market price. 5 lakh ka 2% is how much? 10,000. That is the cost to sell that they have given that. It's not incurred by the buyer, it is incurred by the seller. Great. Okay, that means how much is the price buyer paid to buy the sheeps? 5 lakh only. Because this 10,000 cost is not incurred by the purchaser, it is incurred by the seller in order to sell. So it is a cost to sell. Great. Next, the sheep ka fair value. Or 1 minute, hang on. Let's go one step at a time. Then they will give you year ending ka value. Leave that. So first, journal entry, you tell me, sir. Or before journal entry, tell me the concept. When did you buy? 1st December. I mean, 1st December becomes your IR. IR means initial recognition. Initially, biological assets are recognized at what value? Initially as well as subsequently, same measurement principle. That is fair value or fair value less cost to sell. Fair value less cost to sell. Fair value is 5 lakh. Cost to sell is 10,000. So that means biological assets on 31st December 2003 rather, it will be measured at what value? 5 lakh minus 10,000. How much? 4,90,000. Complete the journal entry for me. Complete the journal entry. You purchased an asset. What is the journal entry for asset purchased? Asset account debit to bank. Here, what sort of an asset is it? Biological asset. So the journal entry will be BA or biological asset account debit. What value? Though we have purchased for 5 lakh, will you record it at 5 lakh or 5 lakh minus 10,000? Fair value less cost to sell, which is 4,90,000. So biological asset will be measured at 4,90,000. But how much money you paid? Did you buy it at 490 or you paid 5 lakh for it? To bank account, how much? 5 lakh. Journal entry matching? No. Biological asset account debit 4,90,000. Oh, but bank will be credited at 5 lakh. Journal entry matching or balancing figure? Balancing figure, how much? 10,000. That is nothing but your loss on initial recognition. Here, every loss, whether it's a gain or a loss, will be transferred straight away to SPL. So this is your fair value loss, you can say, or you can directly write SPL account debit arrived as a balancing figure. That's all. It's a journal entry. Clear, sir? You can say loss on initial recognition, or you can directly write SPL. Absolutely your part. This is your IR. IR as in initial recognition. Can we get to the next part, people? You can tick here only. You can tick in brackets. You can write the value if you want. Now, can we read the next part of the question? I think next part they're talking about subsequent recognition. Can we go through that data? Okay, check. The sheep calf fair value increased from 5 lakh. Sir, on 1st December 20x3 when we bought, the fair value was 5 lakh. But the sheep calf fair value from 5 lakh, it has increased to 6 lakh. On what day? 31st March 20x4. 31st March 20x4 is our year ending date. Okay, so that means on year ending date, will you still show biological asset at 490 or again remeasure? At every reporting period, year ending or quarter ending, depends on what we are following. Biological asset should be measured at fair value less cost to sell. Now at year ending, what is the fair value? 6 lakh. Will you measure it at fair value or fair value less cost to sell? Cost to sell. The transaction cost is 2%. It has to be incurred by the seller in order to get the sheep to the relevant market. In order to sell the sheep, seller has get the sheep to some place, selling place. So that selling cost is how much they're saying? 2%. 2% of what? Market value. Now the market value is 5 lakh or 6 lakh. So at year ending, may calculate fair value less cost to sell for me. Fair value is 6 lakh. Fair value is 6 lakh. Cost to sell is 2%. 2% they only told. So 6 lakh cut 2% is 12,000. So 6 lakh is fair value. 12,000 is cost to sell. So fair value less cost to sell is how much? 5 lakh 88. 5 lakh 88. Any problem? Any problem? That means at year ending, my biological asset should be shown in my balance sheet at what value? 588. But currently, am I showing it at 588 or 490? From 490, I need to bring it to 588. So that means value I am decreasing or increasing? An increase in value means loss or gain? Gain. What is the difference between these two? Can you tell? 490, these two difference is how much? 98,000. So tell me the journal entry for this 98,000. Biological assets account debit 98,000 to SPL. To fair value gain in bracket, you can write SPL or directly you can write SPL. Okay, sir. Any problem? Now you would tell me, have they given the age? Have they given the age? No, that means this is what 98,000 is a total gain. Here information is not given, so we will directly calculate the total gain. If information is given, if you want, you can find out the gain. In fact, in bigger question, I would say always calculate total gain. If the question says calculate price change gain, physical change gain separately, then only calculate, maybe better. This is okay with you, but otherwise total gain is good enough. Question number 3, according to me, is over. What about you? You have any pointers or anything you need to mark? You want me to wait? Okay, may get to the next one. We will see. Next question either. You need to pass it separately. Biological assets. So you can write biological assets in bracket my sheep, in bracket my goat, in bracket my cow. Like that you can present. Yes, if you have multiple class of biological assets, you need to show all. Entry needs to be passed separately. The presentation is same. Biological assets in bracket my cow. That if you show it, it's enough. Move forward. And now we already know, people, fair value gain or loss, where it will go? SPL. What are the two types of gain? The physical change gain, price change gain. Both gain we'll find out if information is available and if question asks. If question doesn't ask, we can directly calculate what? Total gain. But where will all this gain be transferred to? SPL or P&L itself. That is your this particular point. Move towards the next small concept. Next is towards government grant. People, government grant we saw in inclusion also. Government grant we saw in exclusion also. What sort of government grant is accounted as per Ind AS 41? If you have biological assets which are used for agricultural activity and relating to that biological assets, if you get any grant, or relating to agricultural produce up to the point of harvest, if you're getting any grant, that grant is accounted as per Ind AS 41. All other grants are accounted as per Ind AS 20. That is a separate standard on government grant. You had AS 16 or rather AS 12 in your ACA intermediate for government grants. No, here we have Ind AS 20. Okay, everybody understood the inclusion part and the exclusion part relating to government grant? Okay, now the accounting. Now, whenever you have received any, usually the government grant will be towards biological asset. So hence I've written this. Check. If the government grant is relating to biological assets, before you talk about grant accounting, first check how is that biological asset accounted. How is that biological asset accounted? But as a thumb rule or as a basic rule, all biological assets should be recognized at fair value less cost to sell. Only if fair value is missing, then you will go for cost approach. So first check before grant accounting, check how is that biological asset itself accounted at fair value less cost to sell approach or cost approach. If biological asset is measured at fair value less cost to sell, if it is measured at fair value less cost to sell, check whether that grant is a conditional grant or an unconditional grant. Whether it is an unconditional or conditional. Unconditional means government has given a grant, that's it. Are they expecting any more things the entity to fulfill or no expectations? No expectations. Government just gave a grant. Like in COVID time, during COVID, many state governments and central governments gave support to their companies. Did they expect anything from the companies or no expectation? Such a grant is what sort of a grant? Unconditional. No conditions are attached, or maybe conditions are already fulfilled, whatever. Either conditions are already fulfilled or no condition is there at all. So if it is an unconditional grant, then the government grant will be recognized in SPL. The government grant will be recognized in SPL when the grant becomes receivable. When the grant becomes receivable, the day you get a reasonable assurance that we will receive the grant, you don't have to wait till the time you receive the grant. The day you get a reasonable assurance that we will receive the grant, on that day you can account the grant by transferring it to SPL. Did you understand the meaning? Like, how can you say grant has become receivable? Let's say government sent a mail to you. Government sent a email to you saying you have been awarded a government grant of 10 lakh. Government sent an email saying you have been awarded a grant of 10 lakh. Is that a reasonable assurance? Yeah. That means on the day you receive that email, that day only you can transfer the grant to SPL. If it is what sort of a grant? Unconditional. So that way. Suppose if it is conditional grant, suppose if it is a conditional grant, then the grant will still go to SPL only. The grant will still go to SPL, but only when the conditions are satisfied. Only when the conditions are fully satisfied. And that day only you will transfer the grant to SPL. Till that time you will not do the accounting. Clear, sir? This is the accounting treatment for those biological assets which are measured at fair value less cost to sell, on which you have received some government grant. Once more, any confusion in any of them or got it?
Grant we received, still the condition is not satisfied.
Grant we have already received, but condition is not yet satisfied. Okay, Yagnesh questions you guys are getting a grant we have received, condition is not yet fulfilled. In that case, what to do? In that case, you cannot transfer it to SPL. What you will pass the journal entry is bank account debit. Let's say you receive the grant of 10 lakh. You'll write bank account debit 10 lakh. Instead of transferring it to SPL, you will park it in an account called deferred government grant account. Deferred government grant account 10 lakh. From deferred government grant, you will transfer it to SPL when the conditions are satisfied. Like that. This is the Ind AS 41 ka treatment. Okay, Sirji. However, if fair value is missing, then how will the biological assets be measured at? Cost model or cost approach. If biological asset is measured at cost approach, means you are calculating depreciation and all that, no? So hence Ind AS 41 says, now I will not give you the treatment. If biological asset is measured at cost model, means you apply Ind AS 20 ka principle. You apply Ind AS 20 ka principle. What is Ind AS 20? Accounting for government grant. Ind AS 20 is a specific standard which talks about accounting for government grant. So whatever that standard says, you apply that is what we are trying to say. So basically only if fair value less cost to sell approach is followed, then only Ind AS 41 ka accounting will work. Otherwise, Ind AS 20 shall apply. Clear, Sarji? Everybody good. What Ind AS 20 says, we will learn after maybe 25-30 days. Not now. Okay? It's more or less similar to your AS12, but there are some differences which we will learn it there. That accounting, we will see it later. This, if you want quickly, if you want to update anything or review or process anything, I'll wait. If you've got it, I'll move forward. So online doesn't want anymore. Offline is good. Online also so far no comments. That means I'm thinking you guys are good. So let's move forward. No need to read all this. This only I've summarized in the form of chart there. Okay. So the points whatever I've written here next to the notes people is more than enough theory for your examination. Okay. So you don't have to again read all this stuff. If you have time and want to read it, more than happy. We have read this only and presented it as a chart format for your easy, quick reference. Move on. Okay. Next, disclosure is not that very important. Leave that. It's okay. Now, 3 questions are there, I think, from this topic, which can come for 5 marks or above. 4th, 5th, 6th, 7th. Okay. All are LDR. Fine. Those questions I feel has a potential to come for 5 marks or little more than that. Other than that, I feel mostly it's going to be a 2-marker question. So let's see what we can learn from question number 4. Easy only, but be a little careful when you're reading the question. Item by item or each point we will read and analyze. So question number 4 is an LDR. Can we start? Okay, check this question. Moon Limited prepares financial statements up to 31st March. Year ending date is 31st March. On 1st April, the company carried out the following transaction. They purchased a land for 50 lakhs. Okay. Now, normally I say it's a good practice. Majority of the questions in examination will be little on the lengthier side. They will give you a dump of data and lot of stories will be given. Full blade. Like our classes. Lot of blade I say will put in their paper. So it's always better. Have a quick look at the end. What is the requirement? If you know the requirement, you can read the question in that context and understand it better. So what are they asking? First, let's check that. At the end, have they told anything? They're asking you to prepare balance sheet extract, P&L extract for the year ended 31st March 20 X2. Okay. So how these components will get reflected either in balance sheet or P&L, you need to tell. That's all they're asking. Okay. Now first, land you purchase for 50 lakhs. Now land you will account it as per Ind AS 41 or Ind AS 16. Ind AS 16. On land, you will calculate depreciation. Now, we already learned for us to depreciate, DA should be positive, useful life should be limited. Land has unlimited useful life. Depre on land or no depre? No depre. Okay. If you quickly read, nowhere they mention about revaluation model. Because Ind AS 16 says asset can be valued as per, subsequently you can go for cost model or revaluation model. Nowhere I've seen any revaluation data. That means land, so literally I can fill it off. How much did you buy the land for? 50 lakh. Are you following revaluation model? Anywhere mention or no mention? No mention. That means if they don't mention revaluation or market value, indirectly we are following cost model. Will we depreciate the land? No. So you purchased for 50 lakh at year beginning means at year ending also its value will be 50 lakh. No depreciation. Land will come in P&L or balance sheet? Balance sheet. Let's check the solution. Land, have they shown in your solution ka balance sheet at 50 lakh? Land 50 lakh. That's all. So take the data and put it in balance sheet extract or P&L extract. If you have to find out its value, put up a working note. That's all it is. So first page mein half a page you maintain for balance sheet extract, other half for P&L extract. Second page onwards you can start working note if it is required, like that. That's all. Land, any working note required or not required? ICA is given some explanation as working note. We will not worry about explanation. Correct. We know already, we know more than them to explain. Cost modulo, revaluation modulo, Ind AS 16 will apply. All that story they have given. We don't need all that. Leave. They asked to prepare extracts. No? So we'll prepare the extract. As simple as that. ICA always gives with explanation so that you can understand the solutions better. In exam, you don't have to write all this. Okay, sir. So do what they've asked for the question. That's good enough. Okay, next one. Check. Keep your calculator ready. We purchased 200 dairy cows. Dairy cows we have purchased. With what intention? Either to sell them only or to sell the milk from them. So is this an agricultural activity? Managing the cows, is it an agricultural activity? Yes, of course, it's an agricultural activity. So this is what sort of an asset? Biological assets. Okay. Careful. How many cows we have purchased? 200. What was their age on 1st April? 1st April means year beginning. 1st April they were how many year old? What was the age of them? 2-year-old. And what was its value? 10 lakh. Any problem? Yes, sir. Next, they have given some grant too. Next, they have given some other things. So next, they have given some calves. That means anything relating to cow is given, or that's it? That's it. Now, maybe we'll do of the cow information first. What was the age of that cow at year beginning? 2 years. That is at year beginning. At year ending, will it be 2-year-old cow or 3-year-old? 3-year-old. Check. Have they given anywhere? A 3-year-old cow fair value have they given? Here in this table they have given. Check. What is this table? Heading you first read. Fair value less cost to sell. We know that biological assets initially as well as at every reporting period should be measured at fair value less cost to sell. Take your calculator. Now at year ending, is it 2-year-old cow? On 1st April, year beginning it is 2-year-old cow, means year ending May it will be 3-year-old cow. So find out at year ending May, that is 31st March 20x2, 3-year-old cow, what is the fair value less cost to sell? How much is that? 5,000. So one cow ka fair, this is not fair value, this is fair value less cost to sell. One cow ka fair value less cost to sell is 5,500. We have one or we have 200. So multiply, how much is that? 200 into 5,500. How much? 11 lakh. 11 lakh. That means this cow as a biological asset should be come in my balance sheet, year ending balance sheet at 11 lakh. Correct? So go to your solution ka balance sheet. Check biological asset cow. Have they shown it at 11 lakh? Yes. Clear? That's 5,500 into 200, which is 11 lakh. I hope it's clear, people. Correct? But year beginning May, were we showing it as 11 lakh or 10 lakh? 10 lakh. At year beginning May, we were showing it at 10. At year ending May, we have to show it as 11. That means we need to pass one entry. Entry Chapandipa. What is the entry we'll pass? Say biological assets account debit. We have to show it at 11, currently shown at 10. So biological asset we will debit by 1 lakh. It will go where? To SPL. To fair value gain, SPL. They asked only balance sheet extract or even SPL extract. This 1 lakh is a gain, no? So you'll have to show it in SPL as a gain. Check 1 lakh gain have they shown in SPL. Check your solution. Change the fair value of cow. How much? 1 lakh. Easy. If it is straightforward, you can calculate directly. If you want to put up a working note, you can put up your working note. That's your how you want to present it. Can I get to the next one? Now cow ka drama is over. Move on to the next. Okay, now we have received a grant of 1 million. 1 million is 10 lakhs. Towards acquisition of cows. Cows is a biological asset. Towards this biological asset, we have received a grant. So accounting is as per Ind AS 20 or Ind AS 41 only. This government grant ka accounting as per Ind AS 20 or Ind AS 41 only. 41 itself. But before that, recap that chart for me. What did we say? If a government grant is relating to biological asset, first check. How is that biological asset measured? At fair value less cost to sell or cost approach? Which approach are we following? Fair value less cost to sell. If you are valuing that biological asset at fair value less cost to sell, then to account to the grant, one more question you will ask whether it's a conditional grant or unconditional. If it is unconditional grant, that grant is transferred to SPL when the grant becomes a receivable. If it is conditional grant, you will transfer the grant to SPL only when the conditions are satisfied. Now here people, we have already received a grant. We have already received the grant and this grant was non-refundable. That means, is there any condition attached? Have they told anywhere? No. So looking at this data, it looks like a conditional grant or unconditional. If there are conditions, they will mention. If nothing is mentioned, it is what sort of a grant? Unconditional grant, and we have also received it. So what entry you will pass? Bank account debit to government grant, or you can directly write bank account debit to SPL, 10 lakh rupees. Correct, Sarji? Where will this 10 lakh go? Balance sheet or SPL? SPL. Check, have they shown in SPL government grant 10 lakh? Yeah, government grant to 10 lakh. This is your SPL extract. Second point also over. It will not come in balance sheet. Okay, move on to the third one. What is the third pointer, people? For the year ending 31st March 20x2, current year, company has incurred the following cost. 6 lakh to maintain the condition of animals. Obviously, if you're managing cows, means you have to give it food, water, shelter, and all this. So for that, maintenance cost how much? 6 lakh. And 4 lakh towards the breeding fees to the local farmer. Sir, if we have 200 cows, means at year beginning, at year ending, we want 200 only or more? More. So if you want more cows, means we have to engage in the natural process of procreation or breeding. So we paid how much for that breeding fees? 4 lakh. So all these are income or expenses? Expense. So 6 lakh, 4 lakh, both are expense. Have they shown it in SPL? Check. 6 lakh and 4 lakh in SPL extract. Here expense, have they shown maintenance cost to breeding fees? So 6 lakh, 4 lakh. In order to get more cows, we have incurred this breeding fees. Okay, so both are expenses. 10 laksha total so far as the expense. Straightforward. Expense shown in SPL, no impact in balance sheet. Okay, that's what I've written here. It goes off to SPL. Now check. We've incurred breeding fees, means will we have only 200 cows only, or we will have some cow ka bachcha? You will have cow ka bachcha, that is calves. Yeah, chintu cows. So how many chintu cows we got? 100 calves were born beginning of the year or mid of the year? 1st October. Somewhere during the year, on 1st October, 100 calves we have received. Clear, Sarji? There were no other changes in the number of animals during the year ending. Moon had 3000 liters of unsold milk. Okay. Maybe milk thing we'll do it off. Okay. Now, milk is also agricultural produce because you got it from cow. Agricultural produce up to the point of harvest. Agricultural produce up to the point of harvest. Measured at which standard? Ind AS 40. At what measurement basis? Fair value less cost to sell. That means even this milk, though we will sell this milk, it is an inventory. It becomes inventory only after we harvest. Before harvesting, it is measured at fair value less cost to sell. How many liters of milk we have? 3000 liters. Do you know at year ending, what is the fair value less cost to sell a 1 liter of milk? Have they given a check? Yeah, milk ka fair value less cost to sell at the year ending is 24 rupees. 1 liter ka fair value less cost to sell is 24. We have 1 liter or 3000 liters. Multiply these two. 24 3s are 72. So 72,000. That is your closing stock, no? Correct. No? Because once you extract the milk, from the cow, it is a inventory. Inventory should be measured at cost or NRV, whichever is lower. But did we spend money for this, or it's an agri produce? So what does Ind AS 41 and Ind AS 2 Genti standard, both of them say what? That fair value less cost to sell itself, you can adopt it as cost for valuation purpose. So 3000 into 24 is how much? 72,000. Where will the closing stock come? In P&L also, in balance sheet also. Okay, closing stock, we show it as there is a category called changes in inventory in P&L. There you can show. Here ICI is shown it under the income side. But if you want under the expense side, you can create a category called changes in inventory. How do you get changes in inventory, people? Opening stock minus closing stock. Opening stock 0, closing stock 72. So that means net number under the expense side, you can show changes in inventory as negative 72,000. That is the most appropriate presentation. But in this problem, ICI has shown it as a income side, or they have shown it as 72,000. That's fine. Even if you don't want to show it under income side, under expense side, you will show it as what? Changes in inventory. But as positive or as negative? Negative. Like that also, if you want to present, you can. In fact, that is a better presentation in my view. Clear, sir? This is P&L, but closing stock also comes in your balance sheet. So check, have they shown it in balance sheet too? Yeah, and balance sheet mein they've shown milk ko 72,000. Done now. Everybody good, huh? And now the only thing we have to account here is now is the calves. 100 calves were born. No, that treatment if you give, problem is done. Okay, I will show you with entry. I'll also show you in one liner how you can solve. First, maybe just for our understanding purpose, let's solve. When did you get this calf, sir? When were they born? 1st October. First, we will pass the journal entry on 1st October 20x1. 100 calves were born. Is calves our biological asset? Yeah. So, BA account debit. This is 100 calves. Correct? Take a calculator. How many calves again? 100. What day did you get them? 1st October. Sir, we know Ind AS 41 ka simple measurement basis. Initially, as well as at every reporting period, measurement basis is same. Fair value less cost to sell. Now, you receive the calves on 1st October. These are, what is the age of this calves? Any age or newly born? Check on 1st October, newly born calves ka fair value less cost to sell have they given? Yeah, on 1st October, newborn calves ka fair value less cost to sell is 1100. Correct? That means what entry you will pass? 1100 is the fair value less cost to sell of one calves. One calves were born or 100. That means biological asset debit how much? 11 lakh. Clear? Yes, everybody. Can I write to bank? Did we pay any money for this? Or it's a natural process? So that means directly you will credit what? SPL 11,000 or rather 11 lakh 10,000. 1 lakh 10,000. Okay, my bad. 1 lakh 10,000. That is the amount. That's a journal entry you will pass on 1st October. Clear, Sarji? But did they ask you the entry or extract? Balance sheet P&L extract you will prepare on 1st October or year ending? So that means on year ending, one more treatment you'll have to give. What is that? On 31st March 20x2. On 31st March 20x2, again check your screen. On 31st, 1 second. Okay. On 31st March 20, on 1st October, it was newly born calf. But on 31st March 20x2, is it a newly born calf or 6 months calf? From here to here, if you count, what is the age of that? 6 months calf. Now, on 31st March, 6 month calf ka, what is the fair value less cost to sell? 1,300. 1,300. Agreed? Agreed? Okay, that means maybe I'll write it over here. What is the fair value, total fair value less cost to sell? One calf ka, what is the fair value less cost to sell, people? 1,300 here. On 31st March, 6 month calf ka fair value less cost to sell is 1,300. This is for one calf. We have 1 or 100? 100. That means what is the value? 1,30,000 is a fair value less cost to sell. That means this biological asset calf should be shown in our balance sheet at 1,30,000. But currently we are showing 1,30,000 or 1,10,000. That means that's it or one more entry. What entry you need to pass here? From 1,10,000, from 1,10,000 you have to increase it and make it as 1,30,000. So what is the journal entry? Biological asset account debit, what? 20,000. This is a gain. Where will that gain go off to? SPL, 20,000. This is what treatment we will pass in accounts. Yes, sir. But this much we don't need. Because did they ask you entry? No. Did they ask you 1st October ka treatment? No. They asked you balance sheet mein what will come? P&L mein what will come? Sir, how much gain totally will go to SPL? Here 110. Here how much? 20. So totally how much? 1,30,000. Check in P&L. Have they booked gain relating to calves 1,30,000? Here. Newly born related calves gain is 1,30,000. Enough. Correct. Calves biological asset will also come in balance sheet. At year ending, what is the fair value less cost to sell? 1,30,000. Check. Have they shown the calves as a biological asset in balance sheet at 1,30,000? Balance sheet 1,30,000 calves. Done, Sarji. Now instead of doing all this, can I show you one liner? Can I show you one liner treatment? What is that? Very simple. Calves were born. Did you give any money or everything is gain? Everything is gain. What is the fair value less cost to sell at year ending? At year ending, is it newly born calf or 6 months old calf? At 31st March, it's a 6 months old calf. And what is the fair value less cost to sell for one calf? 1300. We have one calf or 100 calves. So 100 into 1300. How much is that? 1,30,000. That 1,30,000 will come in P&L also, balance sheet also. No need to put up any of this. Correct? No. Because calf we did not purchase. We got it as a natural process. So when they were born also it is a gain. Later fair value also is a gain. So everything will go to where? SPL also, and it will come in balance sheet also. So one liner you can calculate and avoid all these entries. If you want entries for your understanding, you can pass. If they ask entries, you need to pass individually like this. But here they have not asked. They only balance sheet ka what will come, P&L mein what will come. Both will get reflected at 1,30,000. So that's a shortcut. That's the reason you might have not seen any working note which ICI has put forth. This is just for your reference I have shown. This question number 4, according to me, done. No. What about you? You have some pointers or any processing? 3 more questions, this chapter is done. Like this one. Okay, these are the questions. 4 to above 4 marks you can expect. Yes, everybody in the online still there, no? No issues? Yes, online, give me a heads up. Can I proceed? At least I'll know that there is no technical issue. All good? Okay, all okay. Setupati and Palani. Yeah, okay. Thank you. Move on. I hope that revision is also happening on a daily basis, everybody. We are committed. Pakka. Online also. Everybody is studying at least whatever. At least you are revising, if not practicing. Ideally, LDR question, as I've been telling, solve once. After going home. Once if you want review, and once without looking at the books, solve. That's the best approach. Rest, you can review. That's fine. Okay. Worst case scenario, if you feel too much of work, my boss is eating my head, at least 1 hour somehow take it out and revise. That much the minimum you have to do, people. It's your own degree. Keep that in mind. Yeah. So don't at the last stage, don't become a little bit not nervous, lazy. Okay, because now we are in the last leg. Another 6 to 7 months ka effort. That wonderful degree will come into your hands. Afterwards, how you want to pursue is you get your wings easily. You can expand. It gives a lot of opportunity. So now 6 months may prioritize work and all later. First priority always studies. Focus more towards exam. How you can best prepare yourself for that. Yeah. All right. Great. Yes. Once we will later we'll give a recap. Hang on. Maybe before the break, I'll give you a recap. Where is Macha? Where is something given? So he's saying, sir, Jayant is saying land value is 70 lakhs, sir. Why can't we take 70 lakhs? Nowhere they said we are following revaluation model. If we are following revaluation model, then the land will be shown at market value. But nowhere they mentioned revaluation model. If you say I want to assume revaluation model is followed, then you can write. Then land you'll have to show it at 70 lakh. In other equity, you have to show revaluation reserve 20 lakh. 70 lakh minus 50 lakh, 20 lakh. But since they have not told anything about revaluation model, better to assume to be cost model. Because if it is revaluation model, generally they will specify. Okay, but it's okay. You can also assume that since they've given fair value, I'll assume revaluation model. That also is a fair assumption in my mind. It's fine. Done. Anything else? Ian Macha? 4 lakh is a break. He is saying, Manoj's question is, sir, this 4 lakh fees is a breeding fee, so it's a DAC. Because unless you incur this, you will not get biological assets, so add it. Yes, his approach is, his point of view is right. But he forgot one thing. Biological assets are measured at fair value. Fair value means value considering after every component. If you add another 4 lakh to biological asset, it will not be fair value. It will be higher than fair. That way. Got it? Point of view is right. If we are following cost model, then what you are saying is right. But here we are not following cost model. We are following fair value less cost to sell. Hence, all this DAC, GECO and all we will not add. No depreciation, no DAC. Straight away, fair value less cost to sell. That's it. Clear? That's a very good point, in fact. One question, so many things they're testing. Now, ICA is known to do that, and that's just the way ICA favorite. In fact, this is nothing. Usually, they'll combine 2-3 standards, multiple standards, and ask. We'll see last topic, my analysis of financial statement will be there. 8 to 10 standards they will combine and they will ask for 10 marks or 12 marks and all mistakes. So they would have done mistakes where we need to identify. But in order to take that chapter first, we need to know all the Ind ASs individually. We'll get to that, right? He's saying before that you give one day leave, sir. We'll read everything. Sure. Before that, if you want, you can watch marathon once and come. When YouTube marathon is there. Some 30 hours ka marathon I've done. You can watch it once. So you'll give a recap of everything. And done. Or maybe if you want, you can watch the revision video. That is shorter. 10 minutes. I think we are revising at the end of everything. If you want once, it's okay. It's manageable. Don't worry. I'll take care of that. But one thing I want you to do is every day minimum 1 hour of solving ideally or worst case scenario revise. That much you do. Balance is fine. Okay. And don't freak out. The moment you see 1 or 2 new questions, don't freak out. It is expected, right? It will test you a little bit. We just need to hang in there. Little patience. You believe that I know this, right? If a dumb guy like me can manage you people, Brihaspati so, tuck like a dandruff, you will shrug it off. Nothing funny, right? It is just a little bit of patience we need to have. That's it. So let's try to develop that. That's a good skill to have, right? I know that the moment you see something, if you're not getting something, we always take a step back and be like, and all that. But learn to embrace those changes. Not everything you want, you will get it in the same way. Right? You want your client to give you all the documents. Client gave only half as a document. But you'll have to manage to do other things. That's how life works. Right? Now, ideally, I want to solve this question. In my view, if you ask, I'm not in big favor of fast track batch. My favorite is regular batch. Aram se I can do. 1 by 1 entry I can pass. We can explain. Aram se talk about life. Aram se, because I have time. Right? And you can also copy it in your class notebook. So you are also happy. I am also happy. But this batch, I can't do that because 330 hours ka content, I can't do it in 200 hours. For me to do that, only way is to review this. That's the only way, or skip it. Correct? So even I am also not getting exactly what I want. Right? Because so many students want fast track batch. They'll be like, 300 hours I can't spend. I've received queries where people say, do it in 100 hours. Less than 100 hours, do fast track batch. Yeah, not even kidding. They say, sir, my existing fast track batch is around 190 or around that. Somewhere you can keep it as 200. They say that only is more. They cut it shorter, make it to 130, 140, 9 less than 100. I'm like, how? Cut to the question only, ashte. But if I skip this question and the same question comes, then how is my classes helping in your exam? It becomes pointless, right? So I somehow still not got that energy to, or maybe that, I've not made up my mind to skip the questions. Maybe if everybody says I need 100 hours class only, then I'll be forced to do a 100 hours batch. But in that batch, you know how it's going to work, right? Half the questions I need to cut. That's the only way, right? Hopefully we'll see. We will not get into that scenario. But what I'm trying to say is, we'll not get everything exactly what we want. We need to embrace a little bit and accept it and work towards it. It's fine. Now, question number 5. Can I do this question and give you a break? Would that be fine with you? Maybe 20 minutes. Can we hold on to that? Okay, observe. Question number 5 again is an LDR. XY Limited is a farming entity where cows are milked on a daily basis. So we are managing biological assets called cow so that we can get some milk from it. So is this an agricultural activity? Yeah, it is. So Ind AS 41 shall apply. Milk is kept in cold storage immediately after milking and sold to the retail distributors on a weekly basis. Fine. Milk we are selling in the regular course of business. So it is inventory. But up to the point of harvest, milk is measured as per Ind AS 41 at fair value less cost to sell. That fair value less cost to sell itself becomes cost after harvesting for Ind AS to valuation purpose. Fine. On 1st April 20x1, dates always pay attention. Year beginning, how many cows we have? 500. Underline that. And all are how many years old? 3-year-old cows. Underline that. Age is 3, number is 500. Fair enough. During the year, some of the cows became sick, Gomata became sick, and on 30th September, 20 cows of Kailasa. Okay, 20 cows of expired. When it happened? 30th September 20x1. Okay, G. On 1st October, the very next day, the company XY, they purchased 20 replacement cows. Since 20 cows expired, we purchased 20 new cows. But keep in mind, though, the age, the 20 new cows which we purchased for 21,000, they were all what year old cows? 1 year old cows. The new cows that we purchased is not 3 year old, it is 1 year old. And how much did we pay for each of them? 21,000. So far, good. Okay, let's do a thing. Now, since they gave some data, we'll read the requirement. What are they asking us? Pass the necessary journal entry. I think this is good. If it is journal entry, we have to go transaction by transaction. That is easy. We can manage that. So, journal entry we need to pass. Okay, for the year ended 31st March 20x2. And also you need to tell how much amount is lying in the inventory. That we will do it at the end. Now, entry. First, people. We know that biological asset at reporting period should be measured at fair value less cost to sell. Last year ka closing balance will become current year ka opening balance. Last year we would have measured the cow at fair value less cost to sell. Correct? No? So do you know on 1st April 20x1 what is fair value less cost to sell? Yeah, how much is that? First of all, how many year old cows were there? 3-year-old cow. 3-year-old cow. Now 3-year-old cow ka on 1st April, what is the value? 27,000. But in the last problem, they had directly given fair value less cost to sell. Is this fair value less cost to sell or fair value? And cost to sell, they have given it separately. Correct? So fair value is 27,000. Cost to sell is 1,000. So fair value less cost to sell is how much? 26,000. Any problem, anybody? Any problem, anybody? No. So that means, can I write like this? The carrying amount. They have given the table, so it's okay. I'll show you. We don't have to write this. The carrying amount of biological assets on 1st April 20x1. How much is that? One cow will be measured at 26,000. One cow will be measured at 26,000. How 26,000? Fair value is 27,000 on 1st April. 3-year-old cow, because they have told 3-year-old cow. And cost to sell is 1,000. So fair value less cost to sell, if you do, you're going to get 26,000. 26,000 is the value of one cow. We have one cow or 500 cows? 500 cows. That means what is the carrying amount? Before the cows expired, what was the carrying amount of biological asset? How much is that, people? 1 crore 30? 1 crore 30 lakhs. 1 crore 30 lakh. You don't have to write it. They've given it in the table. If you want, you can just check here. They've given a table here. 1 crore 30 lakhs. Same thing, they present it as a working note in table. I'm just doing it again for your reference. Okay. So 1 crore 30 lakh is the carrying amount of biological asset in our books so far. Agreed? Yes. Okay. Now, people, few months later, that is 6 months later, 30th September, 20 of these cows expired. Sir, when it expires, can you still show it as biological asset or cancel? Cancel. Cancellation is done always at book value. Cancellation means you have to remove from books. So you'll obviously cancel it at book value. Entire 1 crore 30 lakh you will cancel. Sir, this 1 crore 30 lakh is a fair value for how many cows? 500. All the 500 expired or only 20? 20. That means, tell me, what is the carrying amount of 20 cows? Carrying amount of 20 cows expired. So basically 1 crore 30 lakh is the fair value for 500 cows. How much for 20 cows? When you proportion it, how much are you going to get? 1 crore 30 lakh is for 500 cows. For 20 cows, how much? How much? 5 lakh? 5 lakh 20,000. So what we need to do for this 5 lakh 20,000? Show it or cancel it? This is gain or loss? Loss. You know the entry. If you want, you can put this as working note number 1. Or it is straightforward, you can do it directly also. Or you can present like the way icai is shown. All in one working note. Table approach. Your call. How you want to present it. Individually, together like icai is shown. Absolutely your call. Okay. Tell me, people, what is the journal entry for this 5,20,000? You know this. Tell me. Biological assets ka value you have to increase or reduce? Asset ka value, how do you reduce it? Credit it. So it's a loss in respect to Ind AS 41, all loss to SPL. So the entry is SPL account debit to biological assets 5,20,000. Entry can be tick up. Calculation if you want, I'll do it. Entries we can find, we can tick, I think. So entry again is SPL account debit to biological assets 5,20,000, 5,20,000. That's the entry. Easy, sir. This is the first aspect. Now, immediately the very next day, what did we do? We purchased new cows. But the new cows were 3-year-old or 1-year-old? 1 year. So it doesn't matter. First time if you are recognizing biological asset or at year end, recognition principle, measurement principle is same. What is that? Fair value less cost to sell. Check the screen everybody and keep the calculator. On 1st October, how many cows did you buy? 20. And what was the age of them? 1 year old. So come to the table. On 1st October, you purchased on 1st October, no? On 1st October, what is the age of the cow you purchased? 1 year. 1 year old cow, what is the fair value on 1st October? 21,000. We need fair value or fair value less cost to sell? Fair value less cost to sell. What is the cost to sell they've given separately? 1,000. Fair value is 21,000. Cost to sell is 1,000. So fair value less cost to sell will be how much? 20,000. Any problem? For this, you want to put up a separate working note or directly in journal entry? Directly entry is okay, no? So fair value less cost to sell of one new cow is how much? 20,000. How many did you buy? 20. So what is the total fair value less cost to sell? 20 into 20,000. How much is that? 4 lakh. So tell me the entry. Biological assets account debit 4 lakh. Biological assets account debit 4 lakh. Pakka? To bank, or maybe I'll write the entry over here. Biological assets account debit. The fair value less cost to sell is 20,000 and we have purchased 20 cows. So BA account debit 4 lakh. But did we pay 4 lakh? Check the line again and tell me. Sir, one cow we have purchased it for 21,000. They only told here. One cow we have purchased at 21,000. That means what is the total outflow? Sir, we have purchased one cow by paying 21,000 and 20 cows we have purchased. How much is that? 4 lakh? 20,000. Debit 4 lakh, credit 420. Entry matching or balancing figure? The 20,000 is the loss on initial recognition. That will go up where? SPL. Calculated or balancing figure? Balancing figure. Check, have they passed the same entry? Biological assets account debit 4 lakh. SPL account debit 20,000. To bank account 4 lakh 20,000. This is the entry on the day cow expired and the new cow purchased. Wait or move forward? Move on. Okay, G. Online also, I'm thinking good. Okay, now let's read the next part of the data. Till here we have read and passed all the entries. Next one. On 31st March, that is year ending, XY Limited Company has 1,000 liters of milk. Milk, they've asked the value. We'll do the valuation separately. Leave that. Which has not been sold. We have 1,000 liters of milk unsold means obviously it is closing stock. Inventory. And they have given market value or the fair value of that milk is 20. We'll value it at market value. Fair value or fair value less cost to sell? What is the cost to sell? Cost to sell is 1 per liter. That means what is the fair value less cost to sell, people? Fair value is 20. Cost to sell is 1. Fair value less cost to sell is 19. 19 for 1 liter. How many liters we have? 1,000. 1,000 into 19 is 19,000. That we'll put it up at the end. The value of inventory is how much, sir? 19,000. They've asked separately. We have clear? Any problem? Inventory account debit to SPL if you want to pass the entry. Closing stock account debit to SPL. Not asked to. Anyway, they just asked the value of the inventory. So value we have given. Done. Okay. Anything else they asked? What else? Now, fine. No. This is the fair value they've given. Okay. You can assume the fair value of 3.5-year-old cow in October, blah, blah, they've given. Pass the journal entry they've told. Okay. Now, people, that's it. No more information. Now we have 2 sets of cows. Can you tell me what are those? One basically is probably a 3 or more. Another one is a 1 year old. Now check that. Sir, can we consider fair value less cost to sell existing on 1st September? Not required much. Not required. Shiv Kumar is saying, can I take 1st September ka, or the cows died on 30th September? No. Can I take 30th September ka fair value and then derecognize? Got his question. So he's saying, sir, the carrying amount of biological asset on 1st April is 1.3 crore. Now cows expired on 1st April or 30th September. So first he's saying revalue the biological assets from 1st April ka fair value to 30th September ka fair value and then remove it. Okay, that is not required to be done. Because now fair value, I mean the cows you have purchased it or you have to eliminate. What Ind AS 41 says is initial recognition and subsequent recognition. Subsequent recognition means either it should have become an inventory or the reporting period has ended. Then it becomes inventory, I'll tell you, leave that for the time being. Subsequent recognition refers to year ending, reporting period. Is 30th September your reporting period? Have they anywhere told? In fact, they told only the year ending somewhere they mentioned. No? For the year ended 31st March. So our reporting period is 31st March. So when you buy it, if you measure it at fair value less cost to sell, and on 31st March, if you measure it at fair value less cost to sell, it is enough. In between, again remeasuring it at fair value, not required. Hope Shiv Kumar have answered your question. Suppose if they had told 30th September is a reporting period, because we can follow quarterly reporting also. Then at every reporting period, remeasure it at fair value less cost to sell. Okay? Okay, Shiv Kumar says he has got it too. Palani is saying, sir, if you sold without debt, so how will sale value calculation? Sale, we will talk about it next question, Palani. We are not running away. Next question, all that will come. Sale, slaughtered, all that will come. Next question, interesting one. So can we wait? So in this question only, let's not bring in everything and confuse ourselves. One by one we'll go. And now, 31st March. First, we'll identify. We have two sets of cow. On 1st April, what was the age of that cow? 3 years. At the year ending, will it be 3-year-old or 4-year-old? 4-year-old. First, let's do it for this cow ka fair value gain, we'll calculate separately. And then new cows ka whatever we have calculated, we'll do it separately. For our reference, you can also do it together and pass one entry. If you want, at the end, I'll tell you that. First now, for our understanding, we'll do it separately. Once more, at year beginning, we had how many, what was the age of the cows we had? 3-year-old. So the end of the year, it will be 4 years. Now, come, at year ending, that is 31st March. What is the cow we have? 4-year-old. 4-year-old cow ka 31st March ka, what is the fair value? 26,500. Is this fair value less cost to sell or fair value? So what is cost to sell? 1,100. That means tell me, sir, what is fair value less cost to sell? 26,500 minus 1,100. How much is that? 2 lakh? Sorry, 25,400. That's the fair value less cost to sell. Correct, everybody? And now take your calculator. 31st March is reporting period. At reporting period, every cow should be measured at fair value less cost to sell. What is the fair value less cost to sell of one cow? 25,400. We have 500 cows or in that 20 expired? In that 20 expired. That means what is the fair value? You will multiply by 500 or 480? 480. How much is this? 1 crore 21 lakhs. Any problem, anybody? They've done it, They've done it on the table. I'll show you also. 1 crore 21 lakhs. 1 crore 21 lakhs. 92,000. That is the fair value less cost to sell you are telling. Everybody good? That means these cows, these existing cows should get reflected in our books at 1 crore 21 lakh 92,000. Do you agree with me? Okay. Take your calculator. Initially, what was the carrying amount of our cow? At year beginning, we have already calculated 1 crore 30 lakh. When some 20 cows expired, we cancelled the carrying amount to what extent? 520. That means existing carrying amount of our existing cows is how much? It was 1 crore 30 lakh. We reduced 5 lakh 20,000. These two you eliminate. How much is it? These two you eliminate. How much is that? 1 crore 30 lakh minus 5 lakh 20,000. I think they've done that. If you do that, you will get some amount or leave. First, maybe we'll do it our way and then check. Understood? How much is the value your calculator is showing? When you eliminated these two, you got 1 crore 24 lakh 88,000. How much is the value? Once again, tell me. Maybe I'll try to the value. 1 crore 24 lakh. Now, happy face or sad face? Happy face or sad face? This number, check and tell me happy face or sad face. Currently, we are showing existing cows at 1 crore 24 lakh 80,000. But their fair value less cost to sell is only 1 crore 21 lakh 92,000. So we have to increase or reduce from 1 crore 24 lakh, we have to bring it down to 1 crore 21 lakh 92,000. So it's a fair value gain or fair value loss. What is the difference? Calculate the difference of these two. 2 lakh. Everybody understood? Everybody understood? If you want, you can presentation you want me to show or got it? How you have to simply show is fair value you have to get, and you have to get the carrying amount. That's all it is. Same this working note only you need to copy. One more data you need to bring it on over here. What is it? Fair value less cost to sell, which will be 1,21,92,000. Compare these two, you will get accordingly fair value loss. How much is that fair value loss you are saying? 2,88,000. 2,88,000. Tell me the entry for that. Let's see. You're not increasing, you're reducing biological asset ka value. So SPL account debit to biological asset 2,88,000. This is the total gain relating to all the cows or existing cows. Existing 480 cows ka fair value loss. Clear, Sarji? We have new cows also which we have purchased. On that also we may have some fair value gain or fair value loss. Can we calculate that? Can we calculate that, everybody? Easy. How? Very simple. When did we buy those 20 new cows? 1st October. On 1st October when we purchased new cows, all were how many years? What was the age? 1 year old. Keep that in mind. On 1st October we have purchased and the age of the cows were 1 year. Now we are at year ending date. October, November, December, January, February, March. How many months over? 6 months over. That means at year ending, will it be 1 year old cow or 1.5 years? 1.5 years. Now let's calculate fair value gain or loss relating to new cows. Their age now is 1.5 years. Now 1.5 year old cow ka on 31st March what is the fair value? 1.5 year old cow ka on 31st March ka the fair value is 23,500. This is fair value less cost to sell or fair value only? Fair value. Less cost to sell is 1,100. These two you eliminate. These two you eliminate. What is the fair value less cost to sell? These two you minus. How much? These two come minus. 20. 22. 22,400 is the fair value less cost to sell of one cow. How many such new cows have you purchased? 20. So multiply. 4 lakh. 4,48,000 is a fair value less cost to sell of those new cattle or new cows we purchased. Yes, sir. That means that new cows should be shown in our balance sheet at 448. But check your journal entry. You passed the journal entry for 448 when you purchased it or 4 lakh. On 1st October when you purchased the new cows, biological asset was only debited at 4 lakh. So that means now what we have to do? From 4 lakh we have to bring it to 448. From 4 lakh, you have to bring it to 448 means fair value loss or fair value gain? Fair value gain. How much gain? 48,000. Tell me the entry. Biological assets 48,000 to SPL or fair value gain 48,000. Done now. So they have passed the journal entry for existing cows and new cows separately. If you want, you can also combine and calculate total gain and pass one entry also. That way also you can pass it. You want me to show that or this is good enough? This is good? We have understood you. If you want more, we can discuss, or if you have got it, we'll leave it at that. Clear? No? Can I leave it here? Then? That's your call, how you want to present. If you want, you can combine these two and pass one entry for total gain or total loss. Absolutely acceptable. I've showed you this also in case you want to know that, how to pass the total journal entry. You can present the working notes like ICI is shown only over here. This one table is also good enough. Or separate, 2-3 working notes, small working notes also you can present. But the end point of this chapter is to get gain or loss, we need only 2 things. Carrying amount, fair value. Carrying amount, fair value. Compare on different dates and get the fair value gain or fair value loss. If they ask you for 2 years, then we need to prepare the same working notes multiple times. That's all. So, but same working note will follow through in almost every question. Now, 6th question is there. We'll take a break and resume. Does that be okay with you? Because this will take around 20 minutes. Break. Okay, so let's take about, can we resume back at 8:05? Okay, come back 5 minutes past 8. Take care. Bye-bye. Or maybe, I think somebody asked the recap. Sit, maybe 2 minutes we'll recap and then we'll give, for the sake of Shiv Kumar, 2 minutes. Okay. What is the standard name? Ind AS 41. That talks about agriculture. First, inclusions. There are 3 things which gets included in your Ind AS 41 scope. One is biological assets which are used for agricultural activity. Then, agricultural produce up to the point of harvesting. Any government grant relating to the biological assets. Some exclusions are if some tangible or intangible assets like land or tractor or software and all, if it is used for agricultural activity, then respective standard will apply. If you have received any grant relating to those assets, then Ind AS 20 shall apply. Okay. Up to the point of harvesting, agricultural produce will be valued as per Ind AS 41. After you harvest, after you pluck out the mangoes from mango tree, it will become inventory. Inventory is valued at Ind AS 2. Okay, that is one no. And then what did we study afterwards? So any concept we took up? I forgot what is the concept. Definition. Sir, if you want to apply Ind AS 41, there should be some agricultural activity. In order to say agricultural activity, there should be some biological transformation of biological asset. An entity should manage that biological transformation. Biological transformation means seed becoming a plant or a tree, one cows becoming 5 cows, age of the biological asset increasing, all that is considered as a biological transformation. We should manage this biological transformation so that we can get some agricultural produce that we can sell, or we can sell that biological asset itself. So that is the reason why we are doing this. Now, in order to show biological assets as in our books, there are 3 recognition criteria. One, it should be our asset, meaning it should be within our control. There should be some future economic benefits from that. Fair value or cost, you should be able to measure it reliably. Then we looked at measurement. There is only one measurement basis for biological assets predominantly. Initially, as well as at every reporting period, measure it at fair value less cost to sell. Only if fair value is missing, then only you will go for cost model. Cost minus depre model. Okay. Next is gain or loss. 2 kinds of gain can arise here. One is the price change gain. Another one is physical change gain. If the question asks, then calculate separately. Otherwise, total gain is good enough. Doesn't matter whether it is price change, physical change gain or total gain. Every gain will go off to SPL over here. Then if you have received any government grant relating to biological asset, first check how is biological asset measured. At fair value less cost to sell or cost model. If it is measured at fair value less cost to sell, one more question you will ask, whether it's an unconditional grant or a conditional grant. If it is unconditional grant, recognize grant in SPL as an income when the grant becomes receivable. If it is conditional grant, grant is still recognized as an income in SPL only when the conditions are fully satisfied. If the biological assets are measured at cost model, then grant accounting will be as per Ind AS 20. Then I think remaining is all only the question part we looked at. Yes, no? I think that's enough. So yeah, let's come back by 8.5 and take up the remaining part.